Let's bring in Larry Lindsey, the Lindsey Group president and CEO, former director of the National Economic Council. Larry, it is great to speak with you today. Welcome.
Great to be here. Thank you.
So let's start right there, because CNBC has reported that you're one of 11 candidates that the White House is considering for Fed chair. Is that the case? And have you been in contact with the White House?
All I do is know is what you know or what you report on CNBC. No, I have not been in contact with the White House.
Okay. Would you be interested in a position like that?
Well, I'm of a generation that if the president wants you to do something, you should do it. So that's up to him.
Yeah. I want to get your thoughts on what we're seeing in the economic data right now and what it signals about where rates should be, especially since after that weaker than expected jobs report at the beginning of the month, you did write that the Fed should cut and perhaps cut sooner than September.
Well, when I watched the chair at his press conference and read other people's comments, it seemed like the decision not to cut was in part dependent upon the solid jobs picture. And that was what they were presented with at the time of the meeting. And as Keynes said, when the facts change, I change my opinion. And that's why I suggested that, well, in fact, the facts had changed. And, the way to clean it up, I think, would have been to immediately follow through with a cut. I don't think that portends anything, though, for future Fed decisions.
Do you think September is active? And I guess just as importantly, do you think, based on the labor data we've gotten so far, that the Fed is behind the curve here?
Well, again, this is not my first rodeo on these things. And what I remember the right thing to do is not to comment on a particular interest rate decision. You're not supposed to comment, certainly, until you've been selected as a nominee, and then you're not supposed to comment until after your hearings or during your hearings before Senate banking. So I'm not going to comment on any particular rate cut. I don't think it fits with protocol.
What do you think of the economic? What do you think of the economic data right now? I mean, it has been a bit of a mixed bag. I mean, even just earlier today, we got manufacturing data that was much better than expected.
Yeah, I think the economy is going solidly. We've got to remember we're kind of long in the tooth when it comes to this expansion, which started shortly after the COVID hit, and so if people continue to expect 200,000 a month job gains, they're not looking at history. So I think we're doing about right. The economy's about normal. And inflation is sort of under control. But certainly one can have different views about how one should move forward from here.
What do you think the bond market? Oh, go ahead. Sorry.
No, please. I think the bond market is one of the considerations here. I mean, look, let's all remember what happened last September, right? They cut 50 bips in the run-up to the election, and the long bond went up 75 bips within 2 months. That has got to be a Bronx cheer for what the Fed did. And probably the worst thing that could happen to the Fed is a repeat of that. And I think that would be one of the considerations that the chair and the other members of the committee would take into account before cutting.
I mean, the fact that you have seen this steepening of the yield curve and you have seen longer dated Treasury yields move higher, do you think investors are getting it right in terms of the concern around the fiscal picture right now?
Well, I think the fiscal picture is actually improving more than has been reported. The first quarter of this fiscal year, which was the fourth quarter of last year, the deficit was about $700 billion. In the first quarter of this year, it went down to about 600, much of which was actually in January. In the second quarter of this year, the deficit was all the way down to $30 billion. $30 billion. And, you'd have to sort of lump in July in order to get something reasonable into the second quarter. And even then you get 400 billion. So we have had 300 billion of deficit reduction in the space of just 2 quarters. Some of it is the budget cuts. A lot of it is the tariffs. But that kind of pace of deficit reduction is quite meaningful. And if people are worried about a slowdown, I would point to the rather the rapid fiscal contraction of the Fed.